Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. I'm pumped back on a Monday. I'm feeling much better, and I'm ready to dive into the markets. All right, so the key to this week, what is the key to this week? In terms of the equity markets and even the commodities markets, and to some extent the crypto markets, is going to be the PPI and CPI data that will be released this week. Tuesday, tomorrow morning at 8:30 a.m., PPI is released, and Wednesday morning, CPI. Usually CPI comes first. So this is a little bit of a change. Not really sure why they're doing it this way, but nonetheless, that's what my data points are showing. All right, so again, CPI, PPI comes out first tomorrow morning. Let's flip over to the charts here and see what we have. So number one, we have the S&P 500 is trading slightly higher. If you watched my analysis over the Friday period, you kind of are expecting this, right? The markets are coming off of one of the most insane drops in recent history. Fear is subsiding, and therefore the markets are floating back up. Now, again, in general, the way market psychology works is that you go from extreme fear and you have to get the markets back or investors back to a more equilibrium status before the next down leg can come in. If you have too many people on the bearish side, it doesn't work. The markets can't sell off, right? Because there's too many shorts covering, there's too many people ultimately that can buy into a market. So you have to kind of switch them back into the bullish mode before the markets can flush again. All right. And again, that's psychology and how charts actually work. Now, if we look at the spiders here, the S&P 500, we can see we closed on Friday around 532.70. We're trading upwards of around 534.50, give or take. So it's a slight gain on the S&P this morning, nothing crazy. But if we look at the daily chart, this is where we can start to find our targets, right? So what I do is I look and I say, okay, well, where could the markets go before they run into significant resistance? And again, there's a couple levels to watch here. So number one, what we want to do is we want to see what levels, and we zoom out on the charts and we see the trend lines. And what we could do here is take a trend line here and stretch it into this zone here. All right. And so what we have is a basic low pivot from October, which was kind of that one pullback we had before the bull run that took us all the way up to the recent all-time highs. And we take that low, we connect it through the only pivot we have in here, which is basically a three-prong pivot, 1, 2, and 3. And then what we see is the markets were right here, and then they broke down, and that's where the big flush came in. So the way technical analysis works is oftentimes you'll see a market that wants to go back to what I call the scene of the crime. It's essentially wanting to go back to that trend line and check in and say, oh, okay, we're there, and then the next sell-off can go. Now, what's interesting about this is we also have a secondary trend line right here, where if we connect this high to this high, it coexists right at that same level. And then just below that, we have a gap fill. And so essentially what this does is it creates a zone of resistance on the S&P or the spiders. And essentially, if we get up into this range, starting around 543.50, all the way up to about 548, this is going to be huge resistance on the S&P 500. All right, guys, epic resistance. All right, so that's in general what I'm eyeing here for the markets in terms of upside and where we could ultimately go. I'm just erasing these lines because I want to show you guys something else. So when the markets were dumping out, all right, number one, we had this little pivot here, but it kind of seems like an arbitrary pivot. Why did we come down to this level versus here or here and get a bounce? And what I like to do is I like to always look for answers. It's almost like a puzzle. And what I like to do is I like to go back and I take the lowest point of the bear market in 2022, right? So we know that we bottomed out from the previous all-time high here and we pulled back into this low. That was the bear market of 2022 that started this bull run. And what I love to do is I love to just say, okay, well, that line, yeah, I mean, there's a little pivot there, but why, what really determines that? And what's so interesting here is that this general area here, if you take your Fibonacci tool and you take the low of the bear market in 2022 to the high, the all-time high, the recent all-time high, we actually end up seeing that there's a 236 fib level right around that same point as well. And so if we zoom back in, we can see that we did open below it, touching this, but then we quickly got above the 236 fib, and that's where our bounce came in. Now, what's kind of interesting about these fibs is that we can use them to potentially map out further downside targets, right? And so what I like to do here is I like to say, okay, well, here we have our low from the bear market. Well, what if we put a trend line to this secondary low and we drag it out? And we can see is that if this line, so let's say we get another big dump on the markets, right? And we get another big down move. If we do see that, this trend line right now is right around this this level here. And again, if we zoom out, we can see that this is your 50% fib retrace. So essentially a 50% retrace from your bear market low to your all-time high would be this point. And notice how this trend line coexists with that area there. And also look, see this pivot high right here? That is also in that mix as well. So you have a major pivot before that one correction that took us down to the October 2023 low. And that high should work as support as well. And so what this does is, as a trader, you want to, as an investor, frankly, it doesn't matter if you're a trader or an investor, if you're a good quality trader or investor, you want to essentially game out the market. You want to be a chess player here. You want to think 3 steps ahead. Now, you only really react to what's currently on the docket, meaning the next move that's coming, but you also want to have an idea of what is your downside potential and what is your upside. So remember, we just went over what was the upside, right? We have 3 trend lines coexisting right around this 543 to 548 level. So that's our upside short-term target. But what if we roll over, which is what I expect us to do? Where would the most likely major bounce, even major, maybe potential pivot low be? And the answer again looks to be right now that we could eventually head down to this 455, 460 area. Because again, we have a pivot point, a 50% retrace, and a trend line all existing in that general vicinity. All right. So again, these are the things that I like to do. I kind of like walking you guys through the way I think in terms of my target zone and all of my levels when it comes to the markets or the S&P. All right. So that's where we are on that front. I think it's important to kind of look at the NVIDIA chart as well. So let's flip back to the NVIDIA chart. The NVIDIA chart this morning, pre-market, we are seeing a little bit of an uptick here pre-market on this. It is coming off of its recent highs, but we're still net positive on NVIDIA. Actually, this is real. This is regular hours. So let's do that. There you go. There's your pre-market data. So you can see we are floating up on NVIDIA, which makes sense. If the markets are going up, chances are NVIDIA is also in the mix there. Looking at the chart here, you can see again, this makes a lot of sense in terms of why you hit support where you did on NVIDIA. And if we zoom out on this chart, 50% retrace right there coexists with all this sideways chop. And there's also a flat area right there that gave us support. And that was the low on NVIDIA here short term. Now, where could NVIDIA bounce? Well, again, earnings are later at the end of the month. So that's going to be really fascinating to see. What we could look at is there's a gap up here that hasn't been filled at 126 and change. That would kind of be my max upside. If it gets through that, it's going to go to double top your previous all-time high. But that would be kind of the area that you would say, okay, there is risk that it could at least trade up to here. And if it gets through there, you're double top. On the downside, if they come out and miss, which I don't think they'll miss, the question is going to be margins more than anything and future guidance. But then again, if we did break these recent lows, that would be pretty catastrophic. Your next pivot on that would be around $76. Now, I know a lot of you guys love your charts of Tesla here, so I did want to go over the bigger time frame on Tesla, and then we'll get into some movers this morning. There's not a lot moving. We don't have a lot of earnings. Monday.com is really the big mover this morning pre-market, and then we'll go over commodities as well as the crypto markets, okay? All right, so this is your weekly chart of Tesla. And what we could see is Tesla was kind of chugging along sideways in 2017, 18, 19, et cetera, had this little pop, and then the big bull run started. Now, the big bull run, just like NVIDIA, was unbelievably vertical at the end. And that's exactly what we saw. This is why I kept on telling people, guys, just be careful here on the charts of NVIDIA and the other semis, because the replication of what's going on has been seen in pretty much every bubble before they deflate in the shorter term. And that's what we saw, right? So 2021 high, and then you had a 75% correction, and then you've kind of been chopping here. Now, the first thing that I see here is there was this former wedge pattern here right? Now, the tricky thing on this is that we've come back below it. So we got above it, never confirmed on the weekly, and are now trading back below it. On the other side, we have this trend line right here. Now, this trend line is the more interesting one to me because, again, pivot low to pivot low to pivot low. We've already violated this to the upside and then negated any sort of breakout potential to the downside. So this one is more inconsequential, right? In fact, we can erase that one for the time being. Right now, what I do want to point out is this here, right? This is a trend line that you want to pay attention to. So you have this high here to this high and to this high. So in terms of breakouts in the future, we want to be following this line here. This one has established itself now with 3 hits, 1, 2, 3. If we get above that, this would likely signal a move back to your all-time high on Tesla. Right now, on the downside, what you would do is you would plan to buy this trend line here as long as you don't confirm below, right? So if you break and confirm below, you got to step away very quickly because, again, this would be a major breakdown. But one of the lessons that I teach my members, guys, is to always respect support and resistance until it's broken, right? Lots of us like to pan it out in our minds. We like to say, oh man, imagine if this level breaks, or what a move it would be, or this, that. Okay, that's great to kind of think about that, but you can't trade off of the what ifs. You got to trade off of the facts, the charts, the levels, the probabilities, right? And so that's really important. So let's make sure we respect support on Tesla if it comes in right here around the 150, 155 level until it breaks. In other words, you can buy this level and then you can look for a bounce. But if it gets below, you stop out for a quick exit, right? You exit as soon as it confirms, maybe a 3-5% drop on it or something like that. Very manageable as a trader or an investor. Okay, so that's your kind of eyeball look at the bigger time frame on Tesla. Again, Tesla had this incredible run up, and then they reported their earnings, and we know what the earnings were. They were not great at all. The bullish case, if you're a fundamental person, is the AI narrative, which is the auto driving, the self-driving cars and taxis. That's your bullish case. Your bearish case is that technology doesn't get approved for a long, long time, and it maybe doesn't get up to the point where it's trusted. And the further out that gets pushed, obviously, investors have to value Tesla on what they are doing now. EV market, battery backup market, which again, the margins have really come down substantially on. All right. So that's where we are at this front point, guys, as we test the markets here. MNDY is Monday.com. That's the only one that's moving this morning of interest. If we bring up that chart pre-market, you can see, again, great move up here, up pretty decently. In fact, I'm looking at one of my other charts here. It looks like about 10% gain pre-market. Now, if we go to the daily chart and we say, okay, well, where is resistance on this? So this is very tricky, right? Because at a 10% gain, you're up in this range right up here, and you're very close to, yes, resistance at around 250, 251. But if it breaks that, there's no major resistance to the upside, right? Not until we get back to these highs from 2021. And so, again, it makes it a little trickier, but I do have some levels. So, number one, if we take a trend line here, you can see this little pivot area right here where it dipped and then had this big bounce. That becomes a level of interest. All right, so on Monday, it looks like it's right around this 260, 262 area. So that would give me another level. Now, you guys know what I like to do, right? I just showed it to you with the spiders chart. If we look at this pivot point here and we say, okay, we have a level there, and we also have a high here to a low here, what do we like to do? We like to grab a fib. Let's do our fib. So let's just see. And again, I haven't done this yet, so I don't know if it's going to align, but let's find out. Ah, there you go. All right. So see, this is why it's so cool to do this stuff. So basically, if we take our 2021 high to our lowest point in 2022 and we do a fib retrace, the 50% aligns perfectly with that level. So for me, the safest level today, and listen, there's nothing that's perfectly safe. I want to be super crystal clear on that. Every trade we take, every investment we take, there's always risks involved. It's just a matter of low risk versus high risk probability, right? So basically what we do have is right around this 260 to 262 level, there's a 50% level, 50% fib retrace right there, as well as this pivot point. So that again to me would be the standout level. Now, again, if we go back to the pre-market, we're at 250 right now. So you still could look and say, okay, maybe the high risk level is going to be 251. But because it's right there, I always worry that when the market's open, you get some short covering and it pops it through there. So I won't trade the high pivot here. Instead, I'll look for this upper range on Monday.com to potentially short if it gets up there. All right. So yeah, very cool there. I love how again, showcasing some of this stuff. And a lot of this, I don't do pre game plan. I just do it with you guys in real time and analyze it accordingly. Otherwise, it would take me forever to prep for these versus looking at trades for the trading room and the Apex live stuff and members as well. All right. Now, guys, we're going to take a quick 30-second break real quick here and just take a look at Lux Algo. But just a reminder, Lux Algo, I now have that indicator that I've created. You can get to it from our website, verifiedinvesting.com. It's a buy and sell indicator, basically oversold, overbought, looking for retrace. It's a great indicator, high percentage success rate, and it also tells you when the pattern has failed, which is very, very helpful for traders and investors. All right. So again, if you go to our homepage under the AI and algorithm the link or the drop down at the homepage, you will see it right there underneath that tab. All right, here's Lux Algo, and I do thank them for being an awesome sponsor.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All righty, guys, back in we go, and let's dive right into Bitcoin's chart. And what we can see here on Bitcoin is that, notice this is really important, guys. So again, if you've taken the Winning Trader series, if you know the methodology that I teach, this is super, super important, and you'll see it. So we had a big push last week. We closed above 60,000. But what did I say? I said, listen, we are only in a neutral on the bias of Bitcoin because it has not confirmed above. When it confirms below, you must reconfirm above. Otherwise, it could be a fake out by institutional money. Sure enough, didn't confirm, closed back below. So again, a great example of how important confirmation is and learning that technical indicator. Again, basically guiding me in almost every breakout or breakdown that I watch to see if it's real or not. All right, now what are we seeing today? Well, look at how Bitcoin is inching up, but it's struggling at 60,000 again. So 60,000 to me is a very pivotal line in the sand. We need to confirm above it to really have a shot at going back to about the highs here, which would be around the 69, 70,000 range. As long as we stay below, you honestly have to maintain a short-term bias of negativity on Bitcoin. So below 60,000 favors a slight benefit towards or likelihood of a move back down, at least down to this area here. I want to put in a quick trend line so you guys can see. If we take this low, we drag it across, you can see the low of the body of these candles right there. So this would be a little bit of support here at 53,700. And if it gets through that, you likely retest that 49,000 level. But right now, again, back below 60,000. If we close today above 60,000, the bias goes back to neutral, but not bullish unless it confirms. All right, and I'll walk you guys through that in the coming days. Ethereum today, guys, we have our levels on Ethereum here already laid out on the chart. Support was right down here. We have an up move inside bar. We still haven't hit resistance yet on Ethereum, but I love the price action on Ethereum today. It's looking strong, a little bullish flag pattern in here. So I would say it does favor a move up to 2860, maybe even to 2950 to 3000. This will be your key level of resistance. Same thing applies as with Bitcoin. If you close above, it doesn't matter. It's whether or not it confirms above. Confirmation is everything here. Okay, going to the gold chart, gold gaining a little bit of traction today, continuing up towards that 2,500 marker. Now, remember, tomorrow's PPI data comes out. That will be very influential for gold, either big upside or big downside. And then Wednesday's CPI data will be unbelievably important as well. So today, I kind of expect a little bit of upside today, kind of like what we're seeing, not a big move. And then tomorrow morning, when I do the game plan, it should be a bigger move either up or down in the charts. Upside maximum short term would be just above 2,500, that even number. Any sort of flush, we have big downside support right around this lower level. Again, notice the channel. It's a beautiful channel connecting perfectly high to high to high and then low to low right there. So it tells us that if we come in here, support, or if we come into this level, resistance. All right, silver also gaining a little bit of traction today. But look at this, guys. So silver is fascinating to me because we had this little bit of resistance and we are above it. But look at how we went up a little bit more and tested this down sloping trend line. This is why you have to have these trend lines in here, because a lot of people, when it was above this line, would be like, oh, that's bullish. And it's like, well, not really, because you're running into the next resistance. Resistance levels can be really close together. In fact, it's really negative when they are, because price can like, oh, I broke above this level, right? But then it slams into the next level. It's like, oh, dang it. And now it pulls back off of that. So watch to see where this closes. But for me to get bullish on silver, we would have to close above this down sloping trend line and actually confirm. If that happens, it might open the door to a move back here. But I still remain slightly negative just based on the charts, right? The charts are what guide me here. And we're still struggling right in this area, which favors, again, any sort of rollover in silver takes us down to this area down here. Now, I'm kind of rooting for that because I'd like to actually buy silver or add to my silver positions. But right now, letting the charts breathe just a little bit. Oil today, taking a look at oil, it did break above a down sloping trend line, which gives us our next upside resistance level of around $78.70. So again, a little bit more upside here. Now, would I consider shorting oil as a swing trade up in this range? As of now, no. I was doing more research. In fact, Mike McGlone is a great asset in that respect. And he has all the data on hedge fund shorts, and the hedge funds are just overloaded on the short side again. So even though I favor over the midterm oil eventually rolling over, it's just very tough when there's so overloaded a short side for the hedge funds to really go short oil. So even if it does pull back off of here, I got to step back and just say, hey, listen, I don't have a good edge here. I don't like the fact that those hedge funds are overly short. If it goes through this and gets up here, yes, at that point, that would be a big enough level on the downside to get me short with an extended enough move. My guess is if we do get up there, the hedge funds, a large majority, have probably covered their shorts at that point. And let's not forget about natural gas today, guys. Natural gas is having a rock star move, but look at this. All right, so this morning in my commodity service, smart money commodities, I just covered natural gas. Excuse me, I sold our natural gas position. We were long. We did take our profits here on a Pierce. Now, a lot of people would say, wow, it was above the line when he, and I'm sure some members thought this, man, it's above the line. Wouldn't this be a breakout? Just based on today's game plan, you guys should know better, right? Because essentially we could close above this line, but unless we confirm it's not a breakout, and you've now had a 21% straight move up with a time count, which is also in the winning traders series. So all of these factors are telling me, don't be stupid, just be smart, grab your money and run on the long here. And I did just that this morning. Now, is there a chance I missed further upside? The answer is absolutely there's a chance to that, but it's all probability. So again, probability dictates that, yeah, there's a small chance of that, but there's also a bigger chance we're going to see a pullback on natural gas, and I can reload on any sort of bullish consolidation pattern and a pullback here. And so these are the things that, again, everything in my mind is all about the probabilities, the charts, everything that I'm getting is data driven, right? And that's what verified investing is. I always tell you guys, verified investing is all about the data. Doesn't matter what I hope, what I feel, doesn't matter what any of us hope and feel about the markets. It's what the data is telling us, which allows us to be the casino versus being the gambler. The gambler, you go into a casino enough times, we've all experienced this, unless we're professional gamblers at the poker table, maybe. But aside from that, if you go play blackjack, if you go play all these other things, the house eventually wins. The key is ultimately, can we be the house? And that's where probabilities come in. And that's why data and charts are the only avenue for us as retail investors. And to be honest, this is what institutions use. They do it as well to basically get the odds in our favor. And that's what I'm all about here, folks, is making sure that you guys as retail investors at least have the same data as the institutions do. And that's what we're here about at Verified Investing. So on that note, guys, I got to get going. But as always, thank you so much for tuning in. I'll be back bright and early tomorrow for another game plan. But of course, today at 3:55 p.m., trading the close, and we'll go over all the action in the day trading action. Basically all the action that happens throughout the day. You guys have a good one. Take care.